This is the Build Out West podcast with your host Tony Hyde from Evolution House and Land Specialists and Catherine Smith from Build Bright Builder Brokers.
If you guys are looking to build in WA or simply curious to see what's going on in building, you guys are in the right place. We're here to give insight with professionals in the game, coming to give the inside scoop. Episodes are uploaded weekly, so don't worry, we don't skip a beat and you won't either. Like, share, subscribe, sit back, relax, and let's go.
Hello and welcome to the Build Out West podcast with your host Tony Hyde from Evolution House and Land Specialist and
Catherine Smith from Build Bright.
And we've got a special guest with us today. We've got Gioia Di Masi from Oui Finance. Oui as in French for yes, is that correct?
Yes, that is.
Awesome. So thanks for joining us, Gioia. Gioia owns Oui Finance, obviously mortgage broker, finance, all that good stuff. We know a little bit, me and Catherine, but we always said we'd get an industry expert on. And that's what we've done today. We've got Gioia, and a great time to get in just with all these interest rates and stuff popping up.
Absolutely.
Hot topic for sure.
But let's find out a little bit about Gioia Di Masi. Tell me a little bit about yourself.
Tell us something good.
So
interesting.
Thanks for having me. I'm a finance broker. I've been in the house and land industry for a little under 10 years now. Started off in sales, but now I'm in the finance space. I've got my own company called Oui Finance with a group of us there, specialising really just in like those first home buyer construction loans. We do a bit of the second home buyer, refis, investments, but the first home buyers are really our core market, trying to help them get out of renting, get into the market.
You have to check Oui Finance out on TikTok. It is one of the funniest TikTok things in the world.
Hot women, that would probably be.
I wasn't going to say anything because
I was like, Gioia, so do you have to be a hot girl to work here? Is that the requirement? Or?
And shop at French Connection?
Yeah, I feel like that's the vibe. Yeah,
a bit of a Selling Sunsets vibe, but we're here to help. We're here to help.
Jesus,
we're here to sell.
I know about 30 million FIFO guys that are definitely coming to Oui Finance to do their house and land package stuff.
A few of those. Yeah.
So let's say I want to talk a little bit about we're going to talk about your last name because if people in the building industry know
Yes.
who your dad is, I don't want to. You don't have to talk about. We all know who he is. And I know Mark. I know your dad pretty well, and he's such a great guy. He really helped me when we jumped into the broker world. So just a little bit. Who is your dad?
Who's your daddy?
So he's.
Oh no! No, Catherine.
Where are we going? I don't know. Sorry.
Mark Di Masi is my father. He's been in the building industry since before I was born, so a very long time. And yeah, he's great. He's an expert in the industry. Currently has a building company called Levita Homes. Again, that first kind of young home buy vibe. We finance, it is independent though. So we do work with other builders in the industry. Of course, I do some of the loans for the clients at Levita as well. But because we do stand independent, we work with a lot of clients and we do establish stuff as well, obviously, as well. So a bit of a mix there.
I can attest to like Mark as well, you know, and working with Levita because we were there at the startup and it was such a great fun. But also I've done a few deals with Gioia and it, honestly, We Finance. I don't think you were there when we first done the first one round.
No,
but again, like really, really easy to work with, you know. Part of what we do as brokers in the building game is to make sure that when we're doing your finance, we get you with the right broker, finance broker. And, you know, Joy's a great fit for heaps of young, especially that young vibe client who really sits in there.
What people don't understand is you need to have a broker that knows construction loans.
Yes.
Because they are definitely, as you know, different to an established sort of loan structure in terms of having, you know, land and house separate and then obviously how to settle it for stamp duty and what have you. It's a little bit different. So a lot of times someone will say, oh, I've got my own broker. And I go, cool, as long as they're comfortable with construction loans because that is, again, its own niche in the finance world.
The banks treat it differently as well. Every bank has a slightly different policy and deposit policy as well when it comes to construction. So I think that's why just using a broker in general is great instead of just walking into a bank. If you walk into one bank, they're not going to tell you that the bank down the road has a better policy or a better fit for you. It's like going to compare the market when you use a broker. You've got every option in front of you and we can kind of tell you this suits your current circumstances, you've got this, make your selection and make your choice.
It's like as well though, there's that common mythology that the brokers charge the clients. We get paid through the builder or through the banks and all that. And we don't get paid anymore. We don't bump I know you don't and I know we don't. We don't bump the prices up. We're selling the houses at the same price as the sales reps are.
It's a referral fee. But I think I actually say, because people always go, what's a builder broker? I go, it's very much like a finance broker. So when you talk to a finance broker, you obviously find them the right fit, right bank, right interest rate, whatever for that for that client. Essentially, it's the same thing for being a builder broker, but obviously on the builder end, right?
Yeah, and finance is heavily regulated, so you can't really get caught out being charged something that you shouldn't be and things like that. So heavily regulated, it's all by the book.
So on that, so why We Finance? Why this journey? Obviously, we understand why the building game, but why this journey?
I think what I found was, but previously working for other finance companies and then in the house and land industry as well, there is a lot of stigma around finance, boring, not really picturing that you're going to be sitting with someone maybe young or that's going to explain all the topics to you. And it can be really daunting for first home buyers as well, sitting in front of a so-called, bank manager that your parents have been to for the last 10 years. So we're really just trying to promote, especially in our first home buyer clients or second home buyers, ask the questions. Don't be afraid to ask any question. If you forgot something that mum and dad told you, if you forgot what I said the last meeting, you shouldn't feel afraid to just flick us a text message or give me a call and say, hey, I don't understand what lender's mortgage insurance mean, or I'm a bit confused still about what deposit means.
Yeah, I think, we spoke about it in episode 1, and if you haven't watched episode 1, stop right now, go back and watch episode 1, because you're not allowed to watch episode 2 without episode 1, about what we do it for as well. It's to help you guide you through that journey, because there's 900 million things have to go right for a house and land package, right?
Yeah.
I mean, do you know where to find the best land? Do you know, we know every single sales rep, land agent out there. I can phone them and there's always bits of land behind the scenes that you don't know about. That's just the joy of what we're doing. Oh, what's coming in the future? We need to know. And if they don't know, get yourself out there and go and find a different broker, right? So,
and you're going to be better off down the track. You're building on, as a client and a customer, your own skill set as well. So you may as well find out as much info as you can and let us help you through the whole process.
We do the things like, if you go away and they find a different builder and they get a better package, I'm always like, let me have a look at it. One, if it's too good to be true, it probably is. 2, maybe it's a great deal and I need to invest some time working with that builder, because I want to find the best deal in in WA for my clients. And if that builder's going, hey, this is what we're doing right now, I'll be like, yeah, why? And we'll ask the questions and go, okay, great, but just so you know, it's a good price, but you can't customize the kitchen, or you're getting a pre-built kitchen, it's prefabbed, so you don't get stone. Like, these are the things that sometimes they just don't tell you. So maybe it's probably a lot like you're doing.
When you get a deal across your desk and you're like, I don't think the numbers make sense there. What do you do? What do you do in that situation?
For the client, if they've gone to someone else?
Yeah, let's say if they went to a builder and they're like, this is my building contract. And you're in the know on the building side, and you're going to look at it and go, that doesn't make any sense. You know the pricing now, and obviously working with so many different builders, you see different prices all the time. But we get all the time is we get different contracts across our desk all the time. And I go, I don't even know where this number come from. It was just a fake number just to get you to sign, From your finance perspective, how do you deal with that situation?
So first what I do is I try not to alarm the customer. But if I've got the building docs, I'll go through them and I'll have a look through at what the clients may be saying they've got included, and then have a look through their docs. If I know the builder, of course, I'll touch base with them and just say, hey, the client's wanting this. This is what I'm looking at. Outside of that, though, it's just trying to be transparent with the customer. Once that's done, sitting down with them and just saying, look, this is what I can get you pre-approved for. It's vital that you stay within this. You might want to just double check this price or double check this, because we can't quite go over this number, and I'd hate for you to be hit with a cost after finance.
Yeah.
And that's the hard thing with construction as well, is that once the valuation is done, to be able to add in pre-start items or a price increase or a variation, it is difficult, and you really want to try and avoid that. So it's much better to have the total cost just up front when we go for finance, and see if we can include it in the loan for you. And if we can't, then we can go back and say, right, do we need to get you on a bit more of a savings plan to pay for a few things, or can you do them after the build and we get you a lower loan amount?
Yeah.
We have it all the time, that especially the start before the C word. We're not allowed to use the C word, the word. Banned.
Oh,
COVID's banned from here. No, it's there.
I was going to say.
No, not that.
What word do you think?
That's the joke.
Yeah,
We're not like, Catherine's banned that C word.
That's fine.
We'll just blanket all C words.
Yeah. Well, valuation were hard at the start because they just would not match up, and then they became really easy, right? And we were able to put in 15, 20 grand to deal with price increases. But with the valuation, is when it happens, with the clients, this is another good job of having a broker with you on our side as well. Come back to us. We know how to get it down. You know, we can negotiate with the builder and say, hey, look, it's 15 grand over. Can we do a side deal sort of thing, a contract that you'll pay up to the builder direct in an agreement there, and then it comes out and you still get it done. Obviously, you're not supposed to know that kind of stuff, but there's things that we can kind of do to get it over the line, right? That does happen. It's not completely above board, but it gets it done. It means you get your aircon in that house there later on, right? So, but be open and be upfront and honest and that stuff with the client.
Yeah, exactly that. Just being transparent. If a build contract comes in and it's kind of the opposite to what we're talking about, it's way over the price that we might usually see in that area.
Yeah.
Just a conversation with the client to say, these are what we might face when we get the valuation comes back.
I actually find that so frustrating.
Yeah.
Which I'm sure you do, but it's like, not me, because obviously I know how to do my job, but you'd see all the time when people would sign up a client and the average price in that area is 400 and the package is 460.
Yeah.
And I say,
we got 5% deposit. You're like, guys,
correct. And I said, realistically, the person that's putting money for this house is the bank. So they're looking at it as a numbers game, and they're going, well, why would I borrow? Why would I give you 460 for this house if I can only sell it for 400? You know, it just doesn't make sense. And almost you got to actually start from the medium value of that suburb and work back from that with your package. You know what I mean?
And there's ways we can work around it. You know, get the clients saving a little bit extra for those extra add-ons that they want, or like you were talking about before, maybe an extra variation down the track or something like that.
Yeah.
But being transparent and upfront and knowing exactly what we might face obstacle-wise with the finance process just makes it a whole lot easier.
And again, that's why I went with Gioia and other brokers. I'll let them know where the client's at. This is where we're at. This is what we need to do to get this over the line. Yeah. This is tight budget, and then we're all on the same page, so that we can just get it done, right? Because if you don't, then you just end up. I mean, that last one we done, that unfortunately it fell over due to the situation that we're in. But like, I spent like a week on that one, like with you going, right, this is what I need. You explained where we needed to be, and I made it work. I made it happen. You know, again, if you don't have that connection, you don't have that close knit group that you work with, you won't get that result. It just won't happen because, you know, like I said, I feel like the builder broker is a midfield general with the clients, right? Because they're dealing with the builder, they're dealing with the finance broker, the land agent, settlement agent, all that. So we just kind of run that, you know, in all due respect, you just want to sort the finance and get that, help the client, right? Whereas we want to get the whole package done, so because we don't get paid till the build starts, right? So that's where we work, right? So, and that's why I pride myself, and I know you're the same, as having the right finance brokers, the right land agents, so that you can work with them. Do you know what I mean?
Yeah. So what would you say are the hot topics at the moment in the finance world?
I don't even know if I want to say the word, but interest rates, obviously.
Yeah.
A hot topic at the moment. There's been so much fluctuation with them, more than we've probably ever seen. We're on our 12th rate rise since May last year.
Okay, yep.
So definitely a hot topic at the moment would be rates and living expenses and rental prices at the moment. So we've all kind of got all these three factors all increasing at the same time.
Yeah, I think a lot of people are just nervous, you know, and they're stressed because they're like, well, what if things increase again, and what if they increase again, and where, you know, how much can I pinch, or that kind of thing.
Yeah, and I think you know, where rates are at the moment, between that 5.5% to 6%, because I won't say the C word, but because we were in sub 2% less than 2 years ago, it's been a dramatic increase up to that amount. So that gives, you know, a bit of nerves, uncertainty every single month, having a tiny rate hike. If this was over the space of 5 years and we only had maybe 2 jumps a year, I think everyone's opinion and maybe nerves would be much more at ease because it would be so gradual. So I think that's the important thing to remember as well. We're not at astronomical interest rates. They've been here before. It's just been a crazy jump in the last 2 years.
Yeah.
Like people are looking at all the interest rates and then the build times, and like, well, those build times are actually, we spoke about last episode, they're actually coming down. They've come down a lot. They're nearly at where they need to be, right?
Absolutely. Well, really, I mean, we had delays because the borders were closed, but the borders have been open for over a year now. So realistically, if the builder you're with doesn't have their act together, they're not a very good builder. And
there's no shortage of materials. There's no shortage of materials. There might be like a couple of weeks delay on getting your roof carpenters in because they're not that far behind, doesn't you know? And again, another thing for me, we'll go into construction methods, is why are we still building stick frames? We're not putting up trusses. I don't understand it. Anyway, that's another topic that I'll go into in another episode. because you'd have roofs done in about 5 days.
And I think WA has its own little niche as well, because you go to the East Coast and they can't even get titled land.
Yeah.
So when you're talking about putting your deposit down on a block of land and trying to get finance approval, you're looking at 18 months to 2 years kind of things. So our build times here, the fact we've got so much titled land and you can actually get a pre-approval, not have it expire, get contracts and get formal all within a couple of months, it's crazy compared to
I think talk over East, you had, before we jumped on here, you spoke about some really interesting topics about over East, about how we're not actually comparing apples to apples.
Yeah,
we're comparing apples on, because WA is like its own little country when you look at it, right?
I feel like we're the Texas of Australia. We just have our rhinestones and cowboy boots, and we just ignore all the vegans over
cowboy
East.
boots that I wore in earlier.
I was anyway, we're talking before we were on the press record, but basically what I was saying was, I do a lot of East Coast clients, and the median 4x2 in Perth, you're looking like 570, somewhere there. Over in Sydney, it's almost 1.2, right? So it's 1.17 or something, which is almost twice the price just for the average 4x2 in Sydney. That's a lot of money. And, Tony said like they're spending like 60% of their household income just on mortgage interest.
We're about 35%. Right?
And Perth we're doing at 35%.
And we're earning about the same money.
Correct. So
we're $40 less a week in income.
Yeah, I think there's about $100 difference a week on average for household income between Sydney and WA, because we obviously have like, the
and it's not all negative WA, because we're just used to having our big Prados and V8s and our jet skis and our boats. I'm from Scotland. We didn't have that, so you were like, we had a wash machine in our kitchen. That's how we
it's
work.
sort of like if you're comparing apples with apples. Yeah, look, if you've got $1 million mortgage and you get a price increase, and you're already spending 60% of your income, then that's where the media is sort of channeling those people, the Sydneys, the Melbournes. I would even argue Brisbane's very similar. But Perth is different. We're not spending as much of our household income on mortgage repayment. So it's like, okay, maybe 35%. If it hits to 37, okay, that's annoying, but it's not the extreme in terms of financial stress compared to over East. Do you know what I mean? Also, Perth is one of the most booming cities in terms of population growth and things like that. Yeah. So it's sort of like, well, it's only going to increase. You'd hate in 5 years' time.
We spoke about in the last episode, right? That the WA police are hunting for European cops to come back over. So there'll be another 1,000. But then there's 20,000 students and jobs. There's no houses for them right now, right? Yeah. So it's not all doom and gloom. There's positive. And that's why I suppose if we segue right now is, we'll talk about what it means for first home buyers, second home buyers, not so much the investors, because they're just coming in with cash and buying up, because they're in Sydney going, hold on, it's only $550K to build there, and I'm getting $500. I have so many
cash buyers in Sydney because they're like, what? You can build me something this close to the city for $650,000, and I'm like, yes. They're like, okay, no problem, and I'm like, oh, okay, that was easy. Yeah. But it's like here, it's a totally different world, because like $650 is still seen as quite a lot.
It is. Yeah. Average.
It's just a different perception.
First home buyer is still 450 around that space, especially in the construction space as well. So it is still a lot of money. Absolutely. You're borrowing almost $500,000. But like you said, if we're going to compare apples to apples, that slight spike in the rate of 0.25% over the last couple of months, the difference that it's doing to repayments on your 450 to 500 compared to 1.2 mil. It's definitely a huge difference.
And then I guess you also have to compare, like, interest rates are going up, but so is rent, right?
Absolutely.
I think it's about 17% in the last 12 months rent in WA.
Hence the investors are jumping on it.
Yeah. And then obviously areas are just spiking in rentals as well. And then we obviously have the really low vacancy rate. I think it's lowest it's been in the last 40 years, vacancy, 0.6%.
And it all comes down to where people want to live as well, because the mentality, right? And I think we spoke I could be going the last episode, we spoke about where people want to live. And they're talking about, I'm not living in Baldivis and Golden Bay, it's too far away. But, when you look at over East in Sydney, they're living an hour outside and still happy to travel in.
Baldivis is 25 minutes.
Yeah, right. And it's got everything. It's just a case of, I'm not going to live in Gosnells. Do you know how popular Gosnells is going to be in the next 2 years? Because they're looking at names and going, but my mum and dad bought here, and mum and dad are saying is, hey, we're in a different world. The population growth in Perth has been, well, if it hadn't been for the seaward, it would have been huge, way bigger than it is, right? So, and it's expected to increase again.
Mum and dad, when they like everyone's mums and dads bought, rates were 13, 17%. So if we're going to talk about, apples for apples, rates versus prices versus income, it's all very relative.
Yep.
And I'm sure they're very happy to took that loan when they did at 17%.
Absolutely.
Yeah. Right? For a $30,000 house.
In hindsight, it was worth that. Yeah, I remember back in the day, Hillary's was just starting. Hillary's, right?
So far.
And the block was beachside block on Hillary's. It was $113,000 for like 800 square meters. And my dad was like, there's no way I'm buying that. Who would ever live in Hillary's? Like, that is so far, you know. And he obviously hates himself for it now because it would be worth like $2 million.
Like, that was Coburn and Hammond Park about 6 years ago, 7 years ago. I'm not living in Coburn. It's a hub now.
Yeah. Well, my first house and land package was in Success, okay?
Yep.
Showing my age, but we got the tent. And you get a ticket number, and you have to camp out, and then they'll go ticket number 6, and you go to the land agent with your ticket number, and you say, I'd like to buy block number 7 on lot whatever street, and that's how you did it back in the day. I don't know why we had no internet or something. This was a while ago.
I did the same thing in Kalia when that came out with stockies.
Hilarious. Yeah. So me and my husband, we camped out and we bought our block. It was $99,000 for 680 square meters in Success. And we still have it. Our whole package, 4x2 with the theatre, was $220, and we still have that house. I think it's worth $680 now. So crazy.
Whiteman Park Stockies done that just about a year and a half ago. They had 5 blocks that were all like 500 plus, and they were kind of well priced. And I got a client that wanted someone like, no, you need to put in you had to put in the lottery. It wasn't your ticket; it was your lottery. Do you want this one? If it's available, you get it. No, and if you said no, you didn't want any of them, you were gone. You were literally going, and it was a lottery. And I was like, Mary, come on. I was like, she's like, I can't even bypass it, Tony.
Fold the corner.
I was like, what about all this stuff? She's like, nah, so it was gone. So look, we're not here to talk about, obviously, because we know that investors are good. First home buyers, what does it mean for them then? Because that's the market you really dominate working. A market we were in, I suppose it's just slow for us with the first home buyers. When they're there, and I just think doing this and getting that confidence back, saying, hey, it might creep up a little bit, but I can't. Is it going to go higher? Is it going to come down? You're the expert on there.
It's a tough one because last month, almost every major lender, except for ANZ, they were the only one, every other major lender did not think that the cash rate would increase on the Tuesday just gone, and it did by 0.25. So when you've got all the major lenders, they're even uncertain about what the RBA is going to do and if the cash rate's going to go up. So there is, as you guys said, a lot of uncertainty in the market about what the interest rate is going to do, whether it will hold next month, whether it will go up again. But the real crux of it all is trying to ease inflation. Inflation is at its peak at the moment, so that's why they're putting the interest rates up, because they're trying to slow the cost of living, the cost of living going up. So as much as it pains us to have the interest rates go up, it is because we're trying to get that cost of living to come back down or just at ease. So there is a long-term benefit of it. For the first home buyers, it does mean that, unfortunately, as the rate goes up, your servicing decreases. So if you decided not to buy a home 6 months ago and you came back now, you'd probably be kicking yourself not doing it 6 months ago because of your serviceability. So I think my best advice for the first home buyers is just start planning. Don't sit there thinking, oh, I'll wait, it'll come down, or the market will crash, or I saw this article and it says this, because where prices are at the moment, where the market is at the moment, it is rising. The interest rate is most likely going to sit where it is and not have a huge crash down to pre-C word times. So I think just get planning, get in front of a broker. It's free. It's free to sit with a broker and look at your options. Have a look at what you can borrow now versus what you might be able to borrow in a couple of months' time if the rates go up, because we can give you those figures as well and say, if it went up again by this much, this is what your borrowing capacity goes down to. And if that doesn't suit the type of house and land package or house you want to buy, then that might be an answer that you need to start maybe acting a bit sooner and trying to get into the market, or just planning, how much do I need to save? What deposit does it take? I wasn't going to ask my boss for a pay rise or do more hours, but maybe I will because it will help my servicing.
Yeah.
Or don't have the dream home for your first home. I never had it. I had a 1-bedroom apartment, with a box room, like tiny, so and you build up, you use equity, you save up, you rent it out, get a little bit, come and speak. There's loads of people out there that will happily chat to you about it. I can give you some advice on how to do it yourself.
Your first house isn't your forever house. And I think
everyone moves, was it 3 times on average people move? 3 times they move or something?
I think it's every 7 years now.
Is it
the
7 years?
average home loan is 7 years, which tells us that even though we're getting someone a home loan for 30 years, 7 years' time, see you later. They're either selling it, refinancing it, or purchasing another one.
7 years, because this is the cycle of up and down peaks. Look back to the last 20 years, it's 8-year peaks, right?
Exactly. And I think that's what you have to think. It's the stepping stone. You can always, rent it out, sell it. It's more just seeing it as like a numbers thing and saying, does it make sense, right?
And do you want to stretch yourself to this big dream home, or do you think, you know what, my rent's going up, maybe I'll get this home that is a little bit further than I wanted to be from work or from the city or from my friends, but I'm not going to be stressed about my rent going up. I'm not going to have a rent increase or inspection. I can afford the repayments that I'm making, and I can still have my lifestyle a little bit as well without stretching myself.
Look at the examples we've just given. The Hillary's one, you buying in Coburn, Kalia. Now they're really good investments, aren't they? 3 or 4, 5, 6 years down the road.
Yeah.
That's so there's that 7-year cycle. I want to move again. All right, so you do buying Gauzies, or you buying Hilbert and Haynes and Stockies out there. Great. That could be a case of, I can then go and buy established and Kalia or something where it's a bit more, that's what we all had to do. Everyone.
The market now is for the opportunists that see the opportunity and they see the numbers and they're going, well, rent's increasing, vacancies are low, it just makes sense, the population's obviously increasing. What's really crazy is you're looking at locations, and I was looking at Yanchep. Median now, it's $500,000.
Fastest growing suburb in Australia.
It's wildness, where it's like when we were looking, 3 years ago?
Yeah.
Crazy.
But if you don't like this, I'm not going to Byford, no way. Go and drive down there. It's not that far out. And if you go and look at the estates in there, they're beautiful. They're all there. Everything you need, you go, hold on. They don't just dump an estate and there's no amenities around there. They look after you.
Metronet will change a lot of that.
Oh, absolutely.
Yeah.
Absolutely. And then the Pinjarra hub, and I can go, I was into that stuff. It's another podcast. So tell me more about first home buyers. Like, so what you thinking we should be like? What's your feeling of what's going to happen in the market?
Well, look, at the moment, in terms of lending products, we've got a lot of those low deposit options available, mainly for construction.
Yeah.
What's a low deposit option?
So we've got, when you're a first home buyer in your building, you do get stamp duty exemption, and you also get the $10,000 grant. A little bit of a myth out there is that you can get that $10,000 grant on established properties. You cannot unless they are brand new and have never had someone step foot in there to live in it. We used to have the grant for established, but that was canned quite a few years ago. So that is a bit of a myth out there, which is why the house and land package game for first home buyers, you're really getting a lot out of it by having that grant and having that stamp duty exemption. We have low deposit options, and it's not just talking about your key start, because I know that some people don't love the whole key start idea with where the interest rates are at as well. But we've got a few government schemes at the moment, and when I say government, they're not having any ownership of the property. That's a myth as well. It is still your property. You're still on the title as well, but you're not paying lender's mortgage insurance. So we've got as low as a 2% deposit for single parents out there as well, first and second home buyers for that. And then a 5% deposit with no lender's mortgage insurance, which is usually 2 to 3%. So you're going from 7 to 8% down to 5%.
And is that the first home loan deposit scheme?
That's
that 5%.
The one.
And so I know a bit more about this, but just for the listeners, so the government kind of coincides, and they don't own it, but they'll guarantee the other 15% for the 20% deposit, right? Is that right?
That's correct. They will. So you're not paying that lender's mortgage insurance, but you're also not paying a fat 20% deposit.
Yeah.
If you talked about this on the East Coast, they'd be shocked because they're 10 to 20%.
Yes.
So we do have a lot of good options for first home buyers, but I think where the market is at the moment, planning is going to be the key. If you're a first home buyer and you're not sure what to do because you're seeing all this stuff in the media and you don't know, you're thinking maybe I just stay renting but my rent's going up, have a chat with someone and get planning. Have a look at what that low deposit option looks like for you. And you're not getting stung on rates. You're still getting a good rate with a major lender. Yep. We need to block out that whole key start idea of low deposit.
I think that's good to know because realistically, overwhelmingly, the first home buyer market don't have 20%. I very rarely would ever see someone have 20% deposit. I mean, that's 80 grand, you know, on a 500 grand, you know, package. So realistically, if you can save 20, 25 and get a house,
I've seen that.
Not to.
I've seen like the first home loan deposit schemes and that, and I say to people, they'll go and like they're thinking about building, so they, you know, if they're not sure what to do, they walk down a displaced home and stuff like that, and then they get those guys or women and they're a bit pushy, and they go, oh no, if you aim like 100 grand, you can borrow 600 or whatever it is. Look, I can't scream this from the rooftop. Even if you're thinking about building, go and see a broker or a bank and know roughly where you sit. Get them to do an actual here. This is what you can borrow round about the 550 mark, whatever. And then go, actually, can I afford 550 or am I looking at 450? And then if like 450 is more comparable for me, then come and see us and then we'll tell you what areas you're looking at and then what we think is going to be future. We hear the horror stories and they're still happening as people are signing their $2,000 deposit on the land and in the house and they've just gone out, but they don't take in consideration. You've got to take it in, do you have kids? How many car loans have you got? Do you have a credit card? Do you have another property? But so
I think a lot of the brokers that someone will come to me and they'll go, oh, he said I can borrow 680. And I go, yeah, but do you want to borrow 680?
Do you want to save that
because
much to borrow 680?
Because this is your repayment on that. And they go, oh yeah, no, I don't want to pay that much. And I said, okay, well, you tell me what I'm working with and I'll find you the best deal I can for that price. And honestly, we always will end up doing something like 100 grand less because they go, oh, 680. And then they start coming up with this 2-story house, you know, near the beach and blah, blah, blah. And I go, yeah, but do you want to pay that much? And it's always no. And I think what you can borrow and what you want to borrow are always two different topics, right?
And it's a great place to start. If you're not sure, you haven't even looked into this before, you haven't spoken to a broker, have a look at your current lifestyle, what you're paying in rent, what your bills are, and say, what would I be comfortable with paying per week? If it's your own home, sure, you might go, you know, I'm comfortable paying an extra $100 a month over my rent because it's my own home. Or you might say, no, I want to stay exactly what I'm paying in rent now because that's affordable. As a broker, for a finance broker, we can work backwards from there and go, cool, that equates to this loan, which is this deposit. And then you've got your plan.
Yes, exactly.
I mean, I don't know what, and I know it's just inexperience, and this is half the reason we're doing the podcast, right? Is to, you know, before you do anything, go and get your finance sorted so near where you're at. And if you're not sure, come see a broker who will actually put you towards a finance broker and say, hey, go and check it out. The other option that I'm seeing a bit more of an increase now is guarantor. So the parents go and guarantor for the kids. And I'm seeing that happening more and more. So tell me a bit more about what guarantors, because there's a lot of myths about that the parents have put their house up. It's not like that at all, right?
You know, it's a really great option, especially in the market that we're in. We've got valuations are coming back very high, a lot of equity in people's properties as well, which means that if it is your parents as a guarantor, they're in a really good position and I would say safe and strong position to be able to have enough equity in their home to help you get into your home.
Yeah.
And the short of it is that it helps you as a buyer not have to have this big 20% deposit or 5% deposit. If you've got some savings and you want to put a bit of those in, you still can. But we can be able to get you into a home loan where you still service for the full loan. That's a really key part of guarantor.
That was the point I was going to make up.
You still need to service for the loan. So we're not asking mum and dad to be on the loan and use their income to service or anything like that. As a buyer, you're still going to service for that $450,000 loan. But instead of putting in a huge deposit, we're using some of that equity in your parents' property. And with where valuations are at the moment, it's not like this forever. In 1 or 2 years' time, once you've got enough equity in your property, we can kick mum and dad off and now it's just yours again. So it's a good short-term, I would say, solution to get into the market. And the best thing is that if you do go to a finance broker, we can chat to mum and dad. We can chat to them separately if you want or all together and we can give them the pros and cons and, you know, other examples of other clients that have done it as well. We might be able to get them a better rate on their mortgage as well.
Yeah, I've seen a couple where the parents have moved the mortgage, got a lower rate and it's and then it's a real nice clean. Yeah. I think one of the things on the guarantor as well, say for instance the home loan's worth 500k and you can service it and mum and dad have put 100k down, you're still paying back on 500k, not 400k. It's just that they're there.
They're
and the negative
securing it. So using it as I guess security, similar to when if you're onto property number 2 or an investor and you're going to use that first property to secure the second, that's how I kind of like to frame it to buyers. You're using mum and dad's property to secure.
I suppose the negative on that one would be if something went wrong and you defaulted or whatever went wrong and the mortgage went down, then the bank, Aaron rights, would come after mum and dad. But my understanding is it's the last thing they do. They try and work out a way to do it. They don't want to do that.
They'll still go into hardship with that bank. You can put repayments on hold with that bank. You know, that's what quite a few people did do during COVID. They did put their payments on freeze and things like that. So it is the very last thing the bank will do. However, do remember, call your broker again. That's what we're there for. If something's happened with your job or you're saying, oh my gosh, this is a struggle and I don't know what to do, or mum and dad, you know, they're in a position where they don't know what to do or anything like that, reach out and ask the question, because there's so many options that we can look at for you before resorting to that very last one.
And I've said it before, and this is why we've got the close-knit community we've got, and that's why you'll see them on these podcasts, because there's that sleazy, salesy, horrible attitude out there in the world, especially the house and land package, and especially just coming out of the C word. People just went in there to make money and then just left the clients. We stay with the clients. I mean, I do PCIs with clients. What sort of PCIs when the final walkthrough? I do that with them to make sure they're happy. I mean, I'll connect the client with the builder and say, like, deal with them. But anything that comes through you're not happy with, come straight through me and I'll go and fix, you know. And I think, you know, we've done a few deals with Levita and they were always like onto it before I even got to it, things. So, yeah, you know, you got to remember not everyone out there is out to get you. You know, you said in the last one, Karen, it's your reputation on the line here.
Absolutely.
You know, we don't always get it right and we learn from our mistakes. You know, one thing I'll do is like, hey, I got this wrong. I mean, I've done one where I said it was a 31 course houses and I forgot to put it in. I took the hit on that. That's not the client's fault. They've done the right thing. I just missed it. Done it with Bal as well. I'll take the hit or we'll make it work, you know. So, look, again, things have been missed and you get things for cost, or, you know, this is in the email here, you haven't done it. And the builder goes, right, yeah, no, you're right, we'll put it in. Get me and you to do that fight for you, because there is that connection we've got with the builders and they don't want to lose our business, because it's not just you, it's the other 30, 40 deals that they're going to get, right? So, but again, do your research, massively do your research on who's out there working, you know. Look at the reviews on Google. Do they seem a bit, hold on, they're getting the most perfect reviews ever? It's not really recent. Where is that person? Look at the person who wrote the review. Where are they based? If someone in Sydney is writing about building in Perth and they're not an investor, I think they might have paid for the reviews. But I'm not going into that. That's another topic.
All right. I'm going to put you in the hot seat.
Okay.
I have some amazing non-builder related questions just to make you cringe for social media. Okay. All right. So you might lose some followers. Oh, no. Okay. So prepare yourself. North or south of the river?
I'm a South girl. I grew up north. Grew up in Dianella, but I'm a Freo South gal now.
So better. So much better.
All right, well, that rolls into my next one. Eagles or Dockers?
Oh, it's got to be Dockers.
Oh, Docker girl.
It is Dockers, but, you know, I know that they've not been the best for a very, very long time. Well, I think they're okay.
But that's a true fan, though. That's a true fan. Sticks by them.
I've stuck to them.
Not just jumping between teams because Ronaldo went there. Nah, not having it.
You don't even follow football. So I just am Dockers because they're Dockers. Yeah.
Okay, Docker by default.
Yes.
Okay.
That's it.
That's the safe thing. You're not going to lose any Eagle followers now.
Do you know what? That's a European way, right? You follow it. That's a European way.
Yeah.
You follow what your family tells you.
Does.
Okay.
Italian
family, you're supporting the club.
I have to follow basketball now. So that's my thing.
We're just a whole.
Who's your basketball team?
Oh, I have to go. My partner plays basketball, so I have to go for whoever he goes for and just follow.
We just do what we're told.
Again, default.
Default. Okay.
Yeah.
Rottnest or Dunsborough?
Oh, that's a really hard one. I might have to say Dunsborough only because I haven't been to Rotto in years as much as I love it.
Okay. If you were a guy, where in Perth would you take a girl out on a first date?
Oh, okay. I think an activity is always great for a first date.
Okay, vibes.
Maybe like Holy Moly or that new flight club.
I went there on the weekend.
Darts and things like that.
So good. I did not play any darts, but I got very drunk. So that's a win. I
reckon a fun activity like that, maybe some nibbles after, but nothing fancy schmancy, do something fun and activity.
Okay, activity.
Do I like those activities to be short as well? Because if it's not a good date, you can go, hey, let's just, otherwise, imagine you've like a 4-hour date, you're like, this is horrendous.
We're not going to Holy Moly for 18 holes, just a quick in and out and then get some food or something later.
Many puns.
Yeah, so many puns. As I said that, I was
like,
we don't need puns. Okay. What suburb would you invest in right now?
That's tough.
Gosh knows.
Shut up, Tony.
I know I said I was a South girl before, but I actually think I would pick North.
Yeah.
And potentially go for the Ellenbrook, Bullsbrook kind of
that
area.
Yes.
Yeah, personally for me.
I think once we get the Metronet there, another pocket of explosion will happen.
Just try and, if I was going to invest in a suburb, infrastructure would be the biggest one. My first investment property was in Wellard. So right next to the train line, you've got shops around at the village there.
Mm-hmm.
So infrastructure, try and look for that because it'll get you some good rental yield.
Interesting fact about Wells and Quinana, that's where the Freel Port's going to.
Oh, yeah. And how much was your package in Wellard?
It was, unfortunately, I bought right before the market dipped a little bit. So it was a 330 package and I recently refied it and it came back at 390, which was great. But the rental yield on it is more than my payment. So it's investment-wise great.
Yeah. The numbers are numbering.
The numbers sit on it because when the port's gone down and all that stuff, that's a 10-year.
I did buy it with the intention to hold it though, you know. So I didn't buy it with the intention to flip, and I think then that would probably change my answer of where to invest. So if you're looking for something to hold, I reckon.
I mean, look, if you're getting a cash flow positive, that's a good one. But Ellenbrook's a good one too.
This is the slowest quick fire question.
All right. Last question. Besides old mate, if you had to build with a builder, who would you build with?
Oh no, that's terrible.
This one's going on LinkedIn, so
Oh my goodness. Do I have a budget?
Nah.
Let's go first home buyer. Let's do. No, let's not. Let's go. Let's go double.
If I had like unlimited.
Let's go double
budget,
story. Double story.
Like a Brian Burke
this is her
home,
question. Besides.
You put her first home buyers, Lavida, you're going to put her right in the spot. She's not going to go around and make sausages.
It's going to be awkward Christmas, I tell you.
Say, unlimited budget, I'm building on the beach in Cottesloe, and I'm doing like a Brian Burke
You can spin this question.
Something huge like that.
You can spin this question to avoid a family fallout. I appreciate that.
It's Aussie. They're all just great.
Who are we going with?
Yeah, I reckon Brian Burke on the beach in Cott. That's me.
No, Brian Burke.
There we go.
That's his forte, and that's his way good, isn't it?
Okay, so just to wrap this up, last question. If someone wanted to buy a drink, what are they buying you?
A gin and tonic.
Gin and tonic.
Yeah, that's an easy one.
Okay.
Gin. I love that 4 Pillars Shiraz gin.
You know what? I'm actually a Hendrick's gal, but with lime, not cucumber.
I always go lime. All the Hendricks I go cucumber, but I always go lime in the gin.
But I prefer lime.
Yeah.
So there you go.
Okay, cool.
So, last question, and then back to the real stuff is like, what's your personal views for the next 12 months on all building industry, including interest rates and everything? What do you think is going to happen?
Despite I know there are some articles out here and there, whatnot, the market's going to crash and all that. I don't believe that myself. My personal opinion is that we're going to stay pretty steady in terms of the rental prices staying where they are or slightly increasing. I personally don't believe we're completely done with the interest rate rises yet. However, if we can just slow inflation or keep it at ease slightly, then we might see some more holds throughout the year. We did last month. We had a hold. So that tells us that the RBA, they're kind of teetering on, can we slow inflation, can we not? And I do think it's a great time. I still think it's a great time to buy. I think if you're in a position to purchase or to get a plan together to get your first home, rents are going to continue to go up. I've got an investment property. I've got a rental review right now every 6 months for it, even though the tenants, are in their lease. So we're still seeing that in the market, which tells us that if rents are going to keep going to go up, then as a first home buyer, if you can get a plan together and afford to get into your own home, I think it's a good move.
Yeah,
cool. I agree. I think it's exactly what we're trying to hammer in is do your research and get in there. There's never I don't as long as you're willing to stay in it and write it out. There's never a bad time to buy it.
And like you said, it might not be your dream home, but it's better than renting.
It's like set your goals in and achieve them. Well,
stepping stones.
Is there anything else you'd like to add? We'll close
Thanks
up.
so much for having me.
You did good.
Thank you very much.
Thanks.
Thank you so much for coming in. Really appreciate it. So yeah, look, thanks very much for listening. As always, like, share, follow. Share. We want to get this out there and get that education through. Again, if you're needing to speak to a builder broker, come through the page, Build It West page, and speak to me or Catherine, or go directly to our personal pages, Evolution Housing Land Specialist and
Bill Bright.
Either one, we can help you. You know, high class and stuff, that would be Catherine. Or if you just want a dog to go and get it done, me already. But thank you very much, everyone, and we'll speak soon. Bye.
Cool. See you.